Equities almost back to all-time highs, but gold and silver still licking wounds from Friday. All right, guys, we've got quite a lot to go through today. Let's start with equities. Equities found their feet after 3 straight down days last week. We had the S&P, the Nasdaq, as well as the Dow all surging higher yesterday, with all 3 major indexes now getting very close to those prior all-time high levels. Big tech was able to shake off last week's Microsoft drop that we had as well. Amazon and Google putting in some pretty decent rallies yesterday ahead of those key earnings releases coming up later in the week. Now, turning our attention to the FX space, the dollar has remained firm after Friday's rally. Now, the reason for the rise yesterday was very simple. It was due to very solid economic data. I mean, last night's ISM manufacturing data printed very solid. The headline printing 52 and a monster jump in new orders from 47 to 57, showing a very steady pace of economic expansion. Now, in terms of commodity markets, once again, key focus was metals. Gold and silver still licking wounds after that brutal sell-off that we had on Friday. There's some initial estimates in that Chinese metal traders racked up losses close to 144 million on Friday. So some pretty scary numbers there. Now, like we mentioned in yesterday's webinar as well, after a massive rug pull like that, buyers might be a little bit more cautious on just piling back in and buying the dip. So it's well worth looking into prior episodes like 2011 and 2020, those rise and falls where we had similar price action, to see how those episodes played out. The pain didn't stop at metals. We also had oil getting slapped pretty hard as well. WTI traded down 4.7%, down to $62 per barrel. This came on the back of Trump signaling that talks with Iran is ongoing, and the markets dumped a little bit of geopolitical risk premium as a result. Moving over to other big movers, crypto saw a marginal, and I mean marginal, stabilization after Bitcoin hit its lowest level since last year, April, after that big sell-off that we had. Currently trading close to 78 after reaching a low very close to 74. Now, when equities rally so strongly like we did yesterday, but crypto can't barely put in a bit of a base, that normally tells us a lot about the underlying sentiment for that asset. So just keep that on the radar. Now, moving over to politics, frustratingly, just as we feared in the webinar yesterday, the BLS has now confirmed that they are indeed delaying the January jobs data, the NFP report we would have got on Friday due to the government shutdown. Now, that matters for us because it removes one of the biggest macro anchors that we were looking for this week. Extremely frustrating, but it is what it is. Now, for the day ahead, RBA. The main event we'll be watching today is the RBA, which could create a decent amount of volatility for the Aussie dollar. Like we mentioned, definitely one worth keeping on the radar. And much later in the session, we also have some Kiwi jobs data coming up. So that's just a quick market update. As always, any questions, don't hesitate to let us know.